Karim Gillani, welcome to Medici Studio.
It's a pleasure.
Firstly, congratulations on all the successes with Luge. You have been in the news now for months and months, coming on a year.
Yeah, thank you. Appreciate that.
And I just wanted to talk about your experience as a new VC in the wonderful world of FinTech. And start with a very simple question.
Sure.
Of all the things that you could do as a professional in this industry,
Yeah.
why become an investor?
That's a great question. Well, truthfully, I became an investor by accident, but I love it. It's a lot of fun. The reason why I continue to do it is because we get to be involved at the very beginning of some of the most promising companies in an industry that I think is really important. Financial services makes up about a fifth of the GDP in the US. It is by far the largest category of expenditure in the economy. And so for us to be working with early stage companies that are helping to bring this whole industry out of the dark ages into a new world is really exciting.
That's a good reason. That's a good reason. And you know, as an investor, obviously you are making investments and judging, selecting investee companies. You're looking at startups and saying, these are worthy of my money.
Mm-hmm.
Are you also looking at LPs in a similar way, saying that I'm going to select whose money I take? Is that also
Yeah.
a consideration for you?
Absolutely. Just like startups select their investors and they need to be very thoughtful about that process, we are also very thoughtful about which LPs we bring into the fund. And so we announced recently 2 additional LPs to our fund, Industrial Alliance and BDC. And those 2 are in addition to the 5 that we already had. And we now have a very good mix of returns-driven investors and strategic investors who specialize in the industry. And that's really important because it helps us keep a really good, it helps us keep close to the industry trends and the problems that these large corporates are facing. So we've got Desjardins Group, which is one of the largest association of credit unions in North America. We've got Sun Life, who's one of the largest insurance companies in the world. We've got La Capitale, which is another insurance business, as strategic investors, and then we've got 2 others, CDPQ and FTQ, as pension funds in the fund. And those strategic investors give us a lot of insight. We involve them in our due diligence. We bring companies to them so that they can find opportunities for commercial relationship amongst our portfolio or companies that we see in our deal flow.
Right. Now, you have shared with me your unique process for making investments, and you know, I was really impressed with how thorough the thinking was as you look at selecting the companies that are worthy of your money. Is that a differentiator for you as a competitive advantage, or is that something that is more of a tool to make a better investment decision, or both?
Yeah, it's a bit of both, I'd say. I think for us, we have a number of what I would call differentiators. One of which is, like you mentioned, our eagerness, willingness to dig deep into companies, really understand the business, get to know the founders well, understand the market opportunity. And that makes us better investors and better advisors to those companies long term. Another differentiator is that our team is made up of all operators. We've all been operators in the past. We all come with empathy for what it means to be a founder, the troubles that they go through. Sometimes when you're a founder, it's very lonely, and we can certainly relate to that. The other thing we bring is a wealth of tangible skills that we've accumulated over the years. So in-house, we have backgrounds in engineering, finance, law, sales, business development, go-to-market strategy, technical architecture, and public relations, all of that under one roof. And so that helps set us apart from some of the other investors out there, who, by the way, I wouldn't classify them as competitors necessarily, more like friends of the ecosystem, because we all co-invest together, but it is a differentiator for us.
Right. But let's be honest. I think VC money is not as scarce today as it was 10 years ago.
Sure.
And just because of the maturity of ecosystems around the world, where you have now startups founded, funded, exited, and those founders coming back.
Yes.
We are seeing a wonderful cycle. And I think one of the things that sometimes is a point of debate is how much of VC investment still happens with a herd mentality. Is that something that you see now on the inside? Is that true? Is that a perception, a misperception?
Sure. Yeah, I mean, certainly there are a handful of investors that invest alongside other investors. I'm careful not to use the words herd mentality, but certainly there are investors that participate in rounds of financing without doing the deep level of diligence as, say, a lead investor would typically do. And part of that is driven off of relationships that you build. When you get to know an investor very well, you are familiar with their track record, you trust them, you trust their work ethics, you trust their ability to diligence a company, then it becomes easier for those investors to say, I trust their process, I'm going to come in alongside them. For us specifically, we try to do our own diligence on every company we do, regardless of whether we're leading or not. Mm-hmm. And that's important for us because, like I said before, we like to get to know these companies, these businesses very well, because it makes us better investors and better advisors long term, and allows us to add value as investors into the business. If we don't understand what we're investing in, we can't really add value, and then we become we become a bit of a commodity investor in that sense. And so, to your point of the ecosystem being flush with cash, we would fall into that category if we didn't spend the time and energy to get to know these businesses.
Last question, two-part question for you. What would be the one piece of advice you would give a founder looking to raise their early capital? And is there something that you want people to know who are pitching to you specifically as Luge Capital?
Yeah, great questions. I'd say in terms of advice, first off, ensure that you're solving a real problem. And that's really important. We see companies every once in a while that frankly shouldn't exist because they're not solving a big enough problem. So that's really important. Make sure that you surround yourself with the right people, the right team. We put a lot of value into the pedigree of a team. People who have particular industry insights because they've lived it and breathed it in a previous life is important because it helps you navigate some of the pitfalls that may be ahead. So pick a worthy problem, surround yourself with the right team, and I'd say work hard. Work hard to solve that problem. Be fanatical about it, particularly about building your product. Don't rest until you are the best in the world at what you do. And that's maybe a segue to the second part of your question is we look for companies that demonstrate those traits. Solving a big problem, great team, and have a pathway to becoming the best in the world at what they do.
Great. On that, Karim, let's end. Be the best in the world at what you do. Thank you
sir.
so much, Karim Gillani of Luge Capital.
It was a pleasure.
Thank you.
Thank you.